Why does Bitcoin keeps crashing and then survive? Why do prices fall hard, scare everyone out, and then somehow stabilize, recover, and start climbing again? This chart might actually provide an answer to that question. Not with prediction, but with cost. What you're looking at is a weekly Bitcoin chart going back several years. The red line on this chart is one of the most important and the most misunderstood. This red line represents Bitcoin's electrical production cost. You have to understand that to come up with Bitcoins, you need to mine, quote unquote, it. And the way you mine it through a computer. And the amount of energy that it takes to mine for those Bitcoin, because you have to run millions of mathematical calculation to dig up this Bitcoin. In plain terms, how much it costs on average to mine one Bitcoin using electricity. And it's a huge amount of electricity, believe it or not. Look it up. This is not a guess. This is a trend line drawn with, this is not a guess. This is math, energy, and survival. And once you understand this line, you'll never look at Bitcoin crashes the same way again. First, the basics. The green and red candles are Bitcoin prices. The weekly chart, so we don't have too many daily noises, right? And each candle represents one full week of trading. The vertical axis on the right shows price in US dollars. The horizontal axis shows time from 2018 to today. Now focus on the red line. The red line is labeled BTC. This is an estimated average cost minus pay to produce one Bitcoin. Mostly electricity, hardware, and network difficulty. Think of it like this. If a Bitcoin trades above this line, miners are profitable. And if the line trades at or below this line, miners are under pressure. So this matters because miners are not speculators. They're just operators. They must sell Bitcoins to pay bills. When price falls too far below this line, something breaks. So let's move to the left side of the chart. You see an arrow labeled 2018 bottom, right? Bottom left in white. So notice what happened. Bitcoin collapsed from its prior highs. Fear was everywhere. People declared Bitcoin dead again. But where did the price drop fall? Right at the end of the red electrical cost line. This wasn't random because at that point, the miners were barely breaking even. Weak miners were shutting down, selling pressure slowed. It forced selling was exhausted. Price didn't bounce because people suddenly became optimistic. Price stabilized because the system could not sell anymore without destroying itself. This is an important concept. Bitcoin bottoms don't happen when people feel good. They happen when selling becomes impossible. Look at the 2022 bottom. Same story. Bitcoin fell hard. Liquidity dried up. Confidence vanished. But again, look where price stopped. Right on the red line. Different years, different headlines, same mechanism. Miners were under pressure. Capitulation happened. Selling reached its limits. And once again, price didn't need good news. It needed no more forced sellers. That's why this red line keeps acting like a floor. So why this line matters more than indicators? Most traders obsessed over the RCI, RSI, the moving averages, the trend line, so those tools reacts to price. This line explains why price behaves the way it does. Because Bitcoin is not just a financial asset, it's an industrial network. There are rows and rows in Iceland in fact, I think in Iceland, more energy is used to mine Bitcoin than warm the people, believe it or not. Because it runs on electricity, it runs on machines, on real world costs. When price falls too far below cost, miners shut down. Difficulty adjusts, selling pressures fade. This creates a natural reset. That's why Bitcoin doesn't collapse to zero. It compresses, stabilizes, then rebuilds. So what is happening now? Let's take a look at the right side of the chart. Bitcoin has pulled back from recent highs, and again, price is moving towards the electrical cost line. Not crashing blindly, not free falling, but gravitating towards a level where, where the risk shifts, the pressure changes, and long-term players stop paying attention. This does not mean prices much touch the line exactly. Sometimes the market front runs it. Sometimes it overshoots slightly, but history shows something very clear. When Bitcoin approaches the production cost, downside risk compresses. It doesn't mean volatility disappears. It means asymmetry improves. Now, what this does not mean that price can't go lower short term or volatility is gone and gains are guaranteed. Markets can always overshoot, but with this chart, does mean is that Bitcoin has a structural floor. And people say, what does this keep repeating? Because Bitcoin doesn't change its core rules. New coins require work. Work requires energy. Energy has cost. So, final takeaway, I'm not calling tops. It's about understanding survivability. Bitcoin doesn't bottom because people believe it bottoms because selling stops making sense. And that moment almost always line up with cost. So this red line is not magic. And history shows that when Bitcoin meets reality, that's when long-term turning points are born. And so what we're looking at really is the floor we're talking about is around $58,000.